Hello everyone, this is the Scientific Investor with you guys. In this video, I will share my opinion why saving in a bank account in the coming years will not be beneficial. So for that, I'll show you guys the current interest rates of different countries, the inflation of different countries, the change in interest rate of a country, then the current state of the stock markets like Dow Jones, Nasdaq, and all. Then I'll show you a safe haven asset like gold. Then, in case of a recession, what can you do? How can you protect your assets? Then I'll try to combine the gold chart and the history of previous recession. When those recession happened, what was the change in price for gold? What was the change in price for the interest rates? Then some advices from experts like Howard Marks. Two books I'll share you with you guys. One will be Mastering the Market Cycle, and another will is Rich Dad Poor Dad. I know both are actually so famous, but this will be the topic of today's video. So let's first move on to the interest rates of different countries. When we see the interest rates, we can see in positive and even in negative. When we say negative, some people in the countries like India, and where the current interest rate is way high compared to developed nations, say Mexico has 7%, India has 5. So if we talk to them, like in my personal experience, when I talk to them saying there are countries in which they're having negative interest rate, so these guys can't actually believe that. They still operate their savings account, say receiving this as interest rate. So at the same time, what we have to think when we are saving our assets or money in a bank account is that, say, after 5 years, what it will become. Mhm. So what will be the cost of living at that particular moment? So we'll look at the inflation rate this time. Say, comparing here, say, excuse me for that, the interest rate of India is 5.15. At the same time, interest uh, the yearly inflation for the country is 6.97. So based on these statistics, I don't personally think that it will be a good option to save in this particular country. Say when your inflation rate is more than your interest rate, there's no meaning in doing that, because if you continue to do that, say you buy a coffee today for $1, and after 5 years it will be worth more than your $1. Say in 5 years your $1 turned to 1.3, but the price of coffee went to 1.5. So actually in 5 years you lost your money, you lost the value. Mhm. Now, about recessions, say, as we all know, during 2000, late 2007 there was a recession starting. And at the same time, if we look at the price of gold, it soared high. It started somewhere from 300, and when the recession was over, was around worth $1,000, somewhere near, approximately. And today it's worth $1,400. So this is actually a monthly chart. If you guys want, I'll put that into a weekly one, so it'll be easy. This is actually in a log scale, so it's uh, easy to understand. So when we look at the previous recession, that was in 2002. So comparing that, we can see during the recession, the value of gold started soaring up, and it rallied almost till the next recession. A small correction was the year, but during the next recession, it went up again. So, as the experts talk about this, if you guys actually want to protect your asset, then you should actually consider investing instead of putting your money into savings account where you get these as interest rate. At the same time, you're putting your money to the cost of inflation at these rates. So hopefully, if you guys are thinking more, you have to think, see, the gold price were going up, right? During each recession, as we showcase, the price of gold was going up. So what was happening to the interest rates at different country? If you look at the same, during 2007, when there was a recession, the interest rate in India was above 6. But as soon as the recession ended, it was near 4. So you just lost 2%. So as currently the interest rate is coming down, it's somewhere around 5.5, as we just saw in this. It's currently around 5.15. So say if the interest rate is moving down, that means the central bank is actually preparing for a slowdown. Most of us know that currently there is an economic slowdown, and all the central banks are trying to promote investing, trying to promote more and more investments to their country. So they are lowering the interest rate. So at the same time, the price of gold is moving up. This is a gold chart, weekly chart. If you see the MACD, yeah, there is a bit of correction going on. But if you get a little bit in, you can see that there was a triangle pattern. Now this, we have breached the triangle pattern. There's a breakout. So obviously there will be a retest and move up high. So at the same time, we can see if we go into 4-hour chart, we can see that there was a retest. But yeah, there is possibility that it may come back again, make the 50-day average, moving average as support, and then move high. Now, concerning the recession, gold price, and we have heard a lot of philosophies from a lot of experienced investors, and one among them is Howard Marks. The memos written by him is really famous in the investing community, because there is a lot of quotes by him. Like most of us used to say, this time it's different. So there is a memo from him. He's stating that this time it's different. But what actually happens is all the time it is repeating. It's not repeating, it's rhyming. Like there is a famous quote in which the financial industry repeats itself. No, it rhymes itself. So more or less, if we look at the stock market now, and some of the science of investing, let's say now we look at gold, and we just came to understand that the price of gold was actually moving down from a long time. If we look at our daily time frame chart for that, or say let's take a long time, that's weekly, the gold price was coming down, it bottomed out, it consolidated, then it started moving up. So if we actually take out Wyckoff, a principle in which you can see that after the accumulation, it moves up high, that's the markup, then there is a reaccumulation, and then moving up. At the same time, if we look at markup, then the distribution, and markdown, that's a crash. So if we guys just compare both, say the current situation of the stock markets at which it is, if you look in a daily chart, a bit zoomed out motion, you can see that it was rallying from 2016 till now it's making the all-time highs. So if someone have ever told you anything about investing, I believe that the basic is buy low, sell high. So currently the markets are at the all-time high. What should you do? Should you actually go in, buy, or should you sell? Yeah, of course, this is my opinion, not a financial advice, so that you guys can just act on what I say. You guys can think. So in my personal opinion, I think the stock markets are making the all-time high, which I compare to the distribution of Wyckoff. If I'm following Wyckoff principle, I'm thinking that personally it's at the distribution where it is making an all-time high. Now it may test, then slowly crash down. This is the state for almost all the stock markets, like Dow Jones, Nasdaq, or SPX. So the S&P 500 is showing the same trend. Dow Jones is showing the same trend. So at present, if you are willing to put your money in, I believe that put your money in gold, or even USD dollar is also considered as a safe haven asset. Yeah, I personally believe it's not a safe haven asset, but most of the investors believe it is. So there is a chance that the price of dollar can move up. So putting your money into safe haven assets can actually protect you from a recession, which is being mostly avoided. Most of the guys are actually waiting for a recession. Say take Warren Buffett. The cash holding of Warren Buffett is really high. say when these type of brilliant investors are holding up their cash, that means they are waiting for the market to crash down so that they can buy at lower price. Say it's a sale on stock market, so they will come in at that time. Whereas retail investors like us, those who are don't think in a longer time frame, won't be able to position themselves. They just come in and see the all-time highs, buy there. Within months they are gonna get crashed. So that is where I actually showed you this. In first book is Rich Dad Poor Dad, in which it states why saving is a fool's thing to do and why gold is a better thing to invest in. Now this is the second book, Mastering the Market Cycle. If you guys have time, please do read through the book. It's a wonderful book with a lot of information to gain. Or if you guys are not interested in reading, you can find some podcasts in which Howard Marks is speaking about the market cycle. Because the market actually behaves in cycles. Most of the time, it rhymes itself. So, if you understand the market cycle and see that the price has been a lot higher, the psychology is at the peak, a lot of retail investors are coming in here, then you should actually consider selling. Like, it's my opinion, not the financial advice again, but as far as I'm concerned, personally, I think gold is making a bull trend. It's gonna mark up. So it was in this range for a long time, was consolidating there. It made its base. I believe this was a spring here, if you're looking at the Wyckoff principle. Then it moved slowly up high above the moving average, then it went up. Now it's making a bull pennant there. So if we get into daily as we did previously, you can see that there was a bull pennant and it just broke high. So once it is retesting that area, I personally take that as a target will be more or less the 70 percentage of the triangle. So the measured move should be somewhere around say 1560, 565. I personally believe that will be a perfect take profit area. You can take half of your profit there and wait for a higher price levels, because no one knows what will happen, right? Because this is unpredictable. We just try to position ourselves based on the history. Hope you guys understand what I was trying to express, so you guys can take a better decision to allocate your money. If you're putting that into a savings account in the bank, do think there are countries which is having negative interest rates. Okay, if you are in a country say in India, yeah, you get 5% interest compared to other country, yeah, that is okay, that's better. But again, the inflation for that particular country, if you look here, is 6.9%. So if you're getting that 5% in your interest rate and the inflation rate is this, that doesn't make any sense. That means the bank is actually eating your money. So if you want to put your money into that, it's up to you guys, but I believe it's better to invest in low risk assets. So finally, I'm going to wrap up this here. See you guys on your next video.